Welcome back to the show. Joining me this week is Hunter Horsley, the CEO of Bitwise. I'm super excited to talk to you about what is being called the mainstream era of Bitcoin. But first, Hunter, welcome to the show. Tell me a little bit about your backstory, your origin, and how you got to discover Bitcoin.
Thanks, Natalie. I'm a huge fan, and it's really fun to get to chat with you. Backstory and origin. Gosh, I feel that I've been in the space. I feel like an ancient in the space. We've been in the space for over 6 years now. But the way that we came to it, I was a product manager at Facebook. Before that, at Instagram, and before that, at the Wharton School. And without going into it too deeply, I would say that at Facebook, you could see the scale of the internet. You could see the challenges if you're building a global platform, in that the world, even though they're all hooked up to the internet, still has a lot of standards around the world, 178 different countries, 178 languages, currencies, financial systems. And so if you want to do anything more than read words on the internet, send images, if you wanted to do something in e-commerce or finance, it was really fragmented. And at a place like Facebook, you could also see how the introduction of social media was starting to allow people an aperture into the experiences of others, that caused them to lose confidence and trust in business leaders, government leaders, and institutions. And so against that backdrop, after the great financial crisis, you see the advent of a new technology platform in Bitcoin that accesses the scale of the internet. It creates one global standard, so you don't have the challenge of that fragmentation, and it addresses the decline in trust in leaders of corporations by doing away with the leader and creating a consensus mechanism that allows people to interact peer-to-peer around the world. And that seemed like a really big idea, and drew me to wanting to be a part of stewarding and contributing to the journey of this new platform. So that was my journey to it.
So were you at one of these tech companies, these social media giants, when you first learned about Bitcoin? And what helped you sort of, get down the rabbit hole and think that this really is one of the biggest opportunities of our lifetime?
Yeah, that's right. I first heard about it when I was at Instagram, and candidly, I think, like many people, when I first heard about it, I didn't know enough about it, and at that time, didn't see its full potential. And it was actually the experience of being at Instagram and then Facebook that gave me a context for appreciating the power that a global decentralized standard could bring compared to the large internet platforms that we had, like Facebook and Instagram.
Well, I know you've been very, very busy traveling because you're the CEO of one of the 11 issuers of these new spot Bitcoin ETFs. So can you talk a little bit about that journey? I mean, it was such a pivotal point when the SEC finally gave the green light to these. And now it seems like, more and more demand is coming into the space. The 13Fs were just filed. We can talk a little bit about that because it's starting to emerge exactly what types of firms are investing in these Bitcoin ETFs. So just talk to us about how much of a landmark that was when those were approved.
Is an extraordinary moment. So the Bitcoin ETFs were approved on January 11th of this year. Bitwise had been working on a Bitcoin ETF essentially from our inception. So for 6 years, we've been working on a Bitcoin ETF. I thought that my tombstone was going to say it's a matter of when, not if, which is what we used to say about Bitcoin ETFs until just this year. So I think it's a development that the space has understood would be a breakthrough for a long time, but it hasn't been possible for many, many years, despite firms working on it, including Bitwise. And so it finally happening this year, I think, is a remarkable development, incredibly exciting. Of course, we had views and others had views on how important it would be, but you really don't know for sure until it happens and until the thing is in the wild. So We wondered, but ultimately had to see. And I have to say, it has blown me away. These Bitcoin ETFs are the fastest growing ETFs
Mhm.
in history. There are 30 years of history of ETFs. There are thousands of ETFs, and the ones just launched this year for Bitcoin have broken all of the records. The Bitwise Bitcoin ETF has grown faster than GLD, the gold ETF, and there are a few of the large ones that have all set records. And I think that that's absolutely extraordinary.
Well, I saw reports that so far a lot of the demand has come from retail investors, but we're starting to learn about pension funds, RIAs, more and more money managers that are allocating. What can you tell us about that, and when will we see maybe more of a wave of the institutions finally coming on board? Because some of them actually have to wait a couple months since the approval before they can even add it to their portfolios, right?
Absolutely. Yeah, that's exactly right. So we actually have an amazing and brand new view into the question of, is it retail investors who are buying it? Is it traditional firms? Is it hedge funds? Uh, Firms in the US, RIAs, so professional money managers who are managing over $100 million have to file what's called a 13F disclosure. They have to
Mhm.
file that every quarter, 45 days after the end of the quarter. So May 15th was the deadline to file and show what they owned by the end of the first quarter of 2024. And what it revealed was pretty extraordinary as to the unbelievably rapid adoption by traditional firms of the Bitcoin ETFs. So to share some details that I think are just remarkable, after the first quarter of the launch of GLD, the first gold ETF in history.
Mhm.
Gold, of course, a very familiar asset that's been around for a long time and a long anticipated ETF launch. After the first quarter, so within the first quarter of GLD launching, 95 firms owned the gold ETF. 95 traditional investment advisors, hedge funds, institutional firms. After the first quarter of the Bitcoin ETFs launching, 944 firms own the
Mhm.
Bitcoin ETF. 10x more firms than the gold ETFs, which I think is absolutely remarkable in its scale, and even more remarkable because of what you mentioned, which is that for most professional money managers, financial advisors, institutional investors, they have a huge responsibility set. They're responsible for
Mhm.
what's happening with growth equities, what's happening with international equities, what's happening with municipal bonds, treasuries, high yield, alternatives portfolios. And even if they are incredibly enthusiastic about the possibility of including Bitcoin in a portfolio, it has to fit into their to-do list. It has to go through a process of diligence and committee meetings. And so the
Yeah.
fact that 944 got through that and prioritized it so highly that they got it done within 75 days of the launch, I think is really indicative of the level of interest. And I will also say that it's just the beginning.
Coin Stories is brought to you by Bitdeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, Bitdeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. Bitdeer's not just mining, they are industry pioneers, and Bitdeer stands alone as the only vertically integrated, technology focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. And with the industry's most experienced leadership team, innovation is in their DNA. And it shows. A quarter of their workforce is dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today.
Most firms will not have been able to move that quickly. And I can tell you from our conversations, we serve thousands of firms, that a lot of work is underway and there are a lot more to come. But the 13Fs that were filed by May 15th for the first time really created full transparency and a clear aperture into the fact that Bitcoin is transitioning
Mhm.
and crossing its chasm, stepping into its mainstream era. I think that's incredibly exciting. And I would just add one note further that, to color these numbers, it's leaders in every category. Some of the largest RIAs, Hightower, Sequoia Financial, Brown Advisory, IEQ, these are hugely admired and very large wealth management firms have reported owning Bitcoin ETFs. Some of the leading hedge funds, Millennium, D. Shaw, Schoenfeld, these are not random firms. These are the top of their class. There are pensions that have filed disclosing that they own Bitcoin ETFs, and then a whole host of banks and mutual funds. So there's a lot more to come, but the trajectory out of the gate, I think, is a definitive answer to the question of, will Bitcoin be entirely individuals, or will it be embraced by traditional firms? And the answer is, it's being embraced by traditional firms starting in 2024.
Yeah, for sure. And you said crossing the chasm. I loved what you tweeted a bit ago, saying that really we are moving from the phase of the early market and early adopters to the early majority, which is going to be like 34% in the chart that you shared. It's crazy to think that we're this early, even though so many of us feel like we're late. And I did want to ask you, I mean, the price has done really well. Obviously, these ETFs have contributed to a huge surge in Bitcoin sort of resuming, hitting a new all-time high. But now it's been experiencing some choppiness, some, downward pressure. What's your take on why we haven't hit, say, six figures yet?
It's a funny moment for the Bitcoin space, because and the crypto space writ large, perhaps. A lot of people who have followed the space for a long time and are enthusiastic about the space pay fairly close attention to what's happening day to day, week to week. This new constituent set, the traditional investment professional, just does not operate on the same time frame. So I'll give you an example. When we launched the Bitwise Bitcoin ETF, there's a firm that was incredibly excited about it, highly anticipated it. We sent them a note. We said the product is live. The ticker's BITB. Mm-hmm. They said, this is incredible. We can finally put this in client portfolios. We're going to jump on this ASAP. Let's set up a call next month. So I say that to give an illustration of ASAP means next month, not later today or next week. But that's what moving fast looks like for these firms. So
we're just impatient.
I think that there's a huge moment underway, but the cadence is going to feel slightly different than the cadence of individual investors, which is what the space is most attuned to. It'll be an incredible constituent. They manage $40 trillion in the US in the wealth channel, which compares to somewhere around $10 trillion amongst individual self-directed investors. Mm-hmm. They're well informed. They are long-term oriented investors, and I think that absolutely the price of Bitcoin is going to be discovered this year, now that it's available to a much broader set of investors, and I suspect it'll be much higher. But day to day, week to week, the price moves are more likely to be a function of what traders are doing or individuals are doing, against the backdrop of this very large constituent methodically and slowly moving into the space.
Got it. So when you talk to potential investors and firms that are interested in potentially allocating to the ETFs, do you offer a recommendation as far as what percentage is appropriate for allocation? Because I heard that there was possibly this off-the-record meeting where a BlackRock employee suggested up to 28%, which would be, I mean, super bullish and amazing. I don't know if that's true, but I heard that there was some sort of meeting about it that BlackRock held for private investors, and that was the percentage that they recommended. So does Bitwise do something similar?
I think I saw that analysis, and I'll say it's also an extraordinary part of this moment that firms like BlackRock have endorsed that Bitcoin is a valid and asset for professional investors to own. I think that the analyses that you see that suggest very large allocations to Bitcoin are often retroactive optimizations, where you get to know how things played out, and then you're maximizing some function like returns. And if you take that sort of simple lens and you know how everything went, you know that it was wise to own quite a bit of Bitcoin, because Bitcoin's historical returns have been very high. The challenge is that in practice, most investors are looking to the future where they don't know what will happen. They don't know what will happen with Bitcoin. They also don't know what will happen with everything else, with growth stocks, with fixed income, with their alternatives. So I think as we speak with investment professionals, which we do, hundreds of meetings a week, they're navigating that forward-looking view. Usually the conversation is about two modalities. Either A, allocating for a few clients, and here I'm talking about the wealth management cohort, allocating for a few clients that they know are particularly interested or have asked them in the past, or B, allocating across clients and making it a model allocation that they support right alongside equities and fixed income. I think that the sizing specifics that we are seeing right now are 1% to 3%. You can, if you do an analysis, we have a white paper that a lot of firms use that runs analysis and looks at standard deviations and Sharpe ratios and max drawdown and different sizing. If you do that analysis over the time period that you have for Bitcoin, you can see a credible reason to be anywhere 1% to 5% without even taking on much more risk. Mm-hmm. So you could justify through analysis on a risk for return basis anything in the 1% to 5% range, but it's a combination of science and art. And I would say that many firms net out right now somewhere from 1% to 3%. The last thing I would note is that is trending up.
Yeah.
So it used to be, we've been doing this for a very long time. It used to be that 1% was sort of the bold and significant allocation. And now I would say that 1% is the lower end of the range and 3% is the bold and significant allocation. And you even sometimes see 5 and 10. So I think this will trend up over time as people become more comfortable with the space, but that's what we're seeing in conversations around sizing.
That's super exciting to me. I mean, maybe it's not 28% yet, but I think in the future there's a chance. In terms of just the challenges for people to wrap their head around why they should actually invest, I mean, we are still very early. What are you hearing? What are the issues that people are a little bit more wary about jumping in and allocating? And how do we fix for those as a whole community? How do we solve for that?
Oh, this is a great question. So it depends on the segment. At Bitwise, we serve today, believe it or not, over 4,000 wealth management teams, over 15 banks and broker-dealers. We serve institutional investors, family offices, different, depending on which investor type, there are some different considerations. I would say, just to go through a few of those, for hedge funds, the challenge at the moment to some extent is margin, is a very practical challenge. Is the banks allowing them working capital to put positions on? And that's quite tactical. And I think that will improve over time. And that has a relationship with SAB 121. In the case of institutions, these are firms that have 20 to 100-year timeframes. And I think for many of the institutions, their first foray into the space was venture. And as a byproduct, they experienced firsthand the tumult of 2022. They had exposure to some of the companies that went through real hardship or even came up against the rocks. And so I think that means they need a little bit more time internally where they have committees to re-socialize the notion. But on the institutional side, I'll note that a lot of the largest endowments in the country, many pensions, already have had exposure. They've done it through venture, and because of the journey that venture has gone on, I think that they will just need a little bit more time from a comfort internally. On the wealth side, the time is now, and the challenges on the wealth side are, I would say, primarily twofold. Number one, prioritizing it. Again, they're responsible for every part of their clients' lives. If the client is, worried about sending the kid to college, if CPI comes in lighter like it did recently, they're wondering if they should be rotating some of their allocations. Maybe they've been meaning to do work on a new alternative fund. So it has to fit into that. And a lot of their time doesn't go into investments. A lot of their time goes into client relationships and supporting their clients. So where to piece that in, and then how to get it through the organization. Maybe there's somebody on the investment team that thinks that it's worthless because it produces no cash flows. That comes up. So what is the journey that can allow there to be consensus internally that this is a valid opportunity? Bitwise supports that, spends a lot of time supporting that, doing research, having conversations so that the internal committees have a mental model and an ability to do it. And then finally on the wealth side, the platforms. So wealth is broken up between independents or RIAs, and then bank and broker dealer platform advisors. And those platforms want to see a longer track record. They want to see what their peers do. And so I would say that's another development that needs to take place. But zooming way out, these are reasonable points of friction. The conversation has totally changed to more practical considerations from 4 years ago when, people said, convince me this isn't a tulip bubble. So I think we've entered a very constructive and very different new moment for people considering allocations to Bitcoin.
Well, you mentioned SAB 121, and recently there was a very important vote. I loved Michael Saylor's tweet on it that Wall Street loves Bitcoin, but now the House of Representatives wants Bitcoin, and so does the Senate. Can you talk to us a little bit about that and how important it is for these financial firms to move in and be able to actually hold Bitcoin?
It's hugely important. It's important in high-level ways and specific ways. As on the high-level front, which I think is maybe the most remarkable development here, if you rewind just a little bit, if you rewind to 2018, Bitcoin had a lot of ground it needed to cover developing. It had things related to market structure, education, adoption, security, and so on and so forth. And it had no advocates in the US Congress amongst lawmakers. That has been changing quietly in the background over the course of the last few years. But it is actually those in opposition to crypto that have been the loudest about it. And so there's a perception that US lawmakers, elected representatives, have problems with crypto, that they don't want to see it flourish, that they don't want to create an environment where it can happen in America. That's the perception if you just read what shows up in the Wall Street Journal. In reality, a host of lawmakers have come to view this as an incredible vector for American innovation, GDP growth, access to opportunity, and strengthening the US dollar internationally. But I think that hasn't been very perceptible to the broad public. And so I think at a high level, the vote is remarkable as a referendum that the majority of elected officials, the majority of elected representatives that make the laws that govern the land want to support the development of Bitcoin and the crypto industry in America. And you can count them up. 60 of the members of the Senate voted to support crypto and Bitcoin developing in America. And that is transparent and a result of this vote. So I think that this is historic in that it has never been clearer that now Congress too wants to see this space flourish. And I think that if you're in the industry, you could have been aware of the growing support over the last few years, but for the public, very hard to perceive because there are just a few very public detractors of the space. But I think that changes today. One senator is not more endowed to represent Americans than another senator. There are 100 of them, and the majority of them want to see crypto flourish in America. So I think it's huge in that regard. The other dimension in which it's very important, of course, is many traditional financial firms. We talked about margin relief for hedge funds. Many traditional financial firms rely on banks and broker dealers as a constituent to operate their businesses. And banks and broker dealers have had interest in offering services around Bitcoin, but it has been almost impossible to do so because of this rule. Mm-hmm. And now the House and the Senate, the two elected bodies that make laws in this country, have voted to overturn that, which can pave the way for banks and broker dealers to come online and start offering services around Bitcoin, which I think will be stunning to people. There's that saying that things move slowly and then they move quickly. Mm-hmm. I think that this is a pivotal development that will cause some things to start moving very quickly.
It's time for a quick break to hear these messages from my partners who make this podcast possible. Next up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this July. Join us for 3 amazing days of keynotes, panels, networking events, and my Women of Bitcoin brunch. The Bitcoin conference is where I launched my podcast 3 years ago. You never know what can happen or who you can meet here. Head to b.tc/conference and use the code HODL for 10% off. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing Bitcoin wallets out there. Speed is a secure, low-cost way to send and receive Bitcoin instantly. It's super simple and scores high user ratings, and you can even use it to shop gift cards of your favorite brands to earn rewards. Download Speed using the QR code on the screen or the link in my show notes. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your free 30-minute consultation today. All right, back to the show. Yeah, it's super huge. And there was so much work that went into this behind the scenes. I mean, I've had the chance to go to Washington. There are so many people who are trying to educate these policymakers, and it looks like there is a lot of progress being made. You made me think of a couple of things. One of them is recently I saw a soundbite from former Speaker Paul Ryan bring up stablecoins when he was asked about, U.S. debt. And he brought them up as a source of demand for U.S. treasuries. And he wants there to be favorable legislation and sort of rails within which they can operate. And so I'm kind of curious to get your thoughts, because you sort of alluded to this idea that it will further entrench the dollar in the global financial system. But man, we are so indebted. And so are stablecoins just a way to monetize the debt now?
Well, the space is a prism, and people look at it and they see different opportunities and different potential. But certainly, it's an interest of the U.S. government to be able to finance the government, and it does that by selling treasuries. And to sell treasuries, there have to be buyers. And in the geopolitical environment that exists, that is getting weaker, not stronger. Yeah. And so I think what Paul Ryan is speaking to, and by the way, I would note that Paul Ryan has had this view for a while now. It's just that it's becoming public for the first time, which is what makes this moment so impactful. But his view is that stable coins allow people around the world to use the dollar, which is good for the dollar, in the same way that the oil trade being settled in dollars is good for the dollar. It creates demand for the dollar. So stablecoins propagate more access to the dollar. That is very good for the dollar. It is also good for the dollar in the way that he's describing, which is the way that they stay stable, generally speaking, is that they buy treasuries and commercial paper, creating demand. And so when the government needs to sell treasuries in order to fund its operation, there is a new buyer on the block, and they don't have to sell them exclusively to China. They can also sell them to this new constituent. And I think that can be very constructive. And it's this type of more detailed thinking that, occasionally you'll hear people say things like, I don't know anyone who's studied the space who is not optimistic about it. And that sounds nice. But I think that it's thinking about what is the impact, what is the second order impact that often causes people's eyes to open and see the huge benefit that the space can have in new ways and in traditional ways, like in this case, where stablecoins can be a new large buyer of treasuries. I don't know if that will be the only, I do think stablecoins are still in their journey of development, and it may not be the case that all stablecoins will have an architecture that buys treasuries. But I think he's just shedding light on an obvious but underappreciated, valuable byproduct for the U.S. government.
Going back to the idea of banks holding Bitcoin and offering more services, what do you think the future will look like in terms of the retail banks that so many people are familiar with? Like, will JP Morgan Chase, I mean, obviously we know Jamie Dimon has had his qualms with Bitcoin publicly. Do you think that they will all offer Bitcoin, though, to their customers? And if so, won't that obfuscate things like exchanges and even demand for the ETFs in a way?
So I think to take a step back, I think that Bitcoin is a new computing platform. It's a new technology. Let me put it that way. And there are remarkable patterns in the deployment of new technology. You could look at the PC, you could look at the internet, you could look at the mobile phone. But if we take the internet enabled the advent of a giant new retailer who saw the opportunity before everyone else, and that was Amazon. It also enabled existing large retailers who recognized at the right time that they should leverage this new capability and new technology, like Walmart, to grow immensely. And at the same time, there were some retailers who missed the boat. Either they didn't assess it, they couldn't do it, or they dismissed it. And so we don't have Sears anymore, and we don't have Borders. And I think that a very similar pattern will play out here. You will have a few firms that saw it early, like Coinbase, and have ascended already Coinbase to immense size. Coinbase today, I believe, is more highly valued than Bank of New York Mellon and State Street and others. And then you will have some of the existing players who recognize and invest correctly to embrace the technology, of others who miss the boat and suffer the consequences. And I think that is what happens with most new technology waves. I think that's what will happen here. And I think it's a beautiful thing because it means more options for individuals to access the space. I think that ultimately what you want to develop with Bitcoin is that people have a ton of choices. In the same way that if you wanted to spend money or send money, you could use Venmo, you could use Apple Pay, you could use a credit card, you could use cash, you could use a wire. Similarly, there should develop an ability to use Bitcoin in a self-custody, direct transaction. There should be an ability to use Bitcoin through a new service like Coinbase. There should be an ability to use Bitcoin through a banking account, an ability to access Bitcoin in a retirement account. And so you want to have that whole mosaic available. And then people will do what best suits them, and probably they'll do a combination. In the same way that I pay for some things in cash, I use wires for other things, and a credit card for other things still. So I think that many pieces of that mosaic will become possible as banks and traditional financial institutions are finally able to offer crypto products and services. And I think that's very exciting.
More optionality is always good. I do agree with you there. I wanted to ask you about a recent tweet that you made because it was very much like, what is Hunter up to here? You said that you were talking to a sovereign wealth fund that was mining Bitcoin, probably nothing. Can you tell us anything more?
I can't say anything more because a remarkable component of the moment is that there are so many important investors and firms and businesses that are moving into Bitcoin and into the space. But a lot of them want to fly under the radar for now. I'll give you another example. There's a large technology company that is using the Bitwise Bitcoin ETF to put a meaningful percentage of their balance sheet into Bitcoin. They don't want anyone to know for now. If people knew, I think it'd be really impactful and it'd help people see what I see, what you see, which is that the world is moving in one direction and it's moving faster and further than a lot of people realize. So I would love for more of these to be public, but for the sake of being a good partner and a trusted partner, we sometimes have to, I'm sort of with tweets like that, I'm trying to help people see what's happening while maintaining my responsibility to clients. There was another, I think I mentioned at the MicroStrategy conference, there's a very large bank in the US that is the first bank to approve access to Bitcoin ETFs for their advisors and institutional consultants to put in portfolios. After 2.5 months of diligence, they selected the Bitwise Bitcoin ETF, and they asked us not to mention it publicly, which, kills me, because it's happened, and I think people don't realize it's happened. So, I try to describe things when I can. And that's another reason that the 13Fs, I think, are so remarkable, because it does give so many specific examples.
So you worked at Facebook and Instagram, which now I guess they're one, right? Meta. When is a Meta going to put Bitcoin on the balance sheet?
I think that, wow, that is a great question. I think next year. I think
Next year,
that
really? Okay.
I think
2025,
that
that's your prediction.
I think that things are good. That's my prediction. I think that things are going to move much faster now than people realize. That's for two reasons. First, the ETFs have provided a construct that is unbelievably straightforward to use. And when we talked about the barriers to people adopting the space, I give you a lot of examples across hedge funds and advisors, but they're all logistical and practical barriers. And so the ETF has taken those barriers substantially down. And there still are barriers, but the ETF has made it so much more straightforward. At the MicroStrategy conference, I was looking for the right analogy, and the analogy I came up with, which I'm still not sure is the best analogy, but is, you have a slice of cake, and you think to yourself, it's not great to put this in the fridge. It's not great to put this in the pantry. But if you put that slice of cake in a piece of Tupperware, you can put it anywhere. You can put it in your fridge, in your pantry, in your backpack, what have you. And that's what the ETF has done. There's this thing that people want, which is Bitcoin. Let's just say the slice of cake in my wacky analogy here. And it's put it in a container that makes it so possible for firms. And I think that is one of the important things that has changed. And then I think the other important thing that has changed is many of the leaders in each category have started to embrace and invest in Bitcoin. And as in prior years, when people thought about catalysts for Bitcoin, they thought about the approval of a spot Bitcoin ETF. They thought about the Bitcoin halving. I think if you look forward over the next 12 months, what are catalysts? Catalysts are when the public becomes aware of the extent to which some of the most important and smartest investors and organizations, just recently lawmakers, are on board with Bitcoin, have invested, have supported it, have built something, have started building it. And so I think when we get those announcements or those disclosures and people see it, that combined with the convenience for them to do it too, will allow things to move a lot faster than in the past, where there were less examples, and even if you wanted to do it, it was much harder. And that's why I think things that normally you would expect would be 3 years away, maybe 3/4 away, or a year away. I think corporates are earlier, but I think that you'll see more of that.
I'm guilty of not being patient enough. So thank you for simplifying it for me. Okay, so I did a little bit of homework on ETFs in general around the time that the spot Bitcoin ETFs were approved, and I learned some really interesting things. You already brought up the fact that these Bitcoin ETFs have outperformed gold, but when you look at, for example, that market, most people are only familiar with GLD, that won sort of the liquidity race. And right now it seems like Fidelity and BlackRock are leading in terms of the amount of investors in those two in particular. So can you talk a little bit about the competition between ETF issuers? How do you stand out when it's essentially the same underlying asset? And do you see a situation where 10 years down the road, there aren't as many Bitcoin ETFs as there are now?
It's a great question. I don't think that the world needs 11 Bitcoin ETFs. So I do think that the field will narrow. And I think that we've already seen that even just a few months in. Today, there are 4 that have a meaningful amount of size. They're in the billions, and volume, which is very important for ETFs. And there are many others that are just in a different tier. And those are very important features of an ETF. So I definitely don't think that you need 11. And in terms of, so Bitwise is a specialist and only focuses on this space and has for 6 years. And so what I can sort of relay is the conversations that I have. My perception is that firms that invest with us, they're familiar with the model of choosing between a generalist and a specialist. In private credit, BlackRock has a fund and Apollo has a fund. In private equity, BlackRock has a fund and KKR has a fund. In venture, BlackRock has a fund and Sequoia has a fund. And some firms prefer to work with a best of breed specialist. And those firms are often interested and in many cases have chosen to work with Bitwise. The other reason that firms will often be drawn to Bitwise is the support that we provide in conjunction with the product. So for many firms, making sure that you have the highest quality product, I would argue that the Bitwise Bitcoin ETF is the highest quality product, and there are many ways that we could talk through that. But in addition to making the allocation, in some ways, the allocation is the simplest part. You allocate 1%, but then the hard part ends up being the 100 questions that you get after you do that. You have to now suddenly understand, what does the vote in the Senate mean for my investment? If your nephew comes home from Thanksgiving and says, Bitcoin is dead, Bitcoin Cash is king, suddenly you're on your back foot and you have to answer, what should I say? What should I think? What should my committee think? What should my client think? This is a big undertaking for something that today, at least, is a small part of a portfolio and relatively unfamiliar. So for many firms, banks and broker-dealers, many of whom work with us, wealth management firms, knowing that they can attach to their journey into this space a very experienced partner that has brought in people from traditional Wall Street firms, as well as people from the technology space, to always be there for them, to understand what's going on and have accurate and high quality information condensed down to the amount of time they have available and available whenever they need it. That's very valuable as well. So I think some firms like a best of breed specialist and some of the attributes of products that go with that. Other firms really like having the support that Bitwise can offer, because we don't have other things to talk about. We don't have the burden of also needing to be there to explain what's going on with treasuries this week, what's going on with growth equities, what's going on with international equities, which other firms have as a responsibility because they are managing that. So if you have a 1 hour meeting and you need to inform the client on everything they need to know about growth stocks, international equities, the high yield market, and your new credit fund, it's hard to spend a lot of time on Bitcoin, whereas for Bitwise, that is fully what we do. So I think that has allowed us to grow to the size we've grown to, and be quite popular with firms who are looking for those attributes.
No, that's really interesting. It has been fun to see all of the inflows and see just how much demand has come in. I think one of the ETF analysts from Bloomberg called it the Cointucky Derby, which I think is a great way to put it. But all right, Hunter, we've covered a lot of ground. So before we wrap up, is there anything else you wanted to share or talk about that maybe you haven't mentioned or I haven't gone through yet?
I think the only other thing I would add is that I hope that people feel really optimistic and excited about the future. I think that many people who followed this space have seen at sometimes duress of the journey of something important and new being invented and fighting its way into the world. But in 2024, I think we can clearly say it's happening and we are on a trajectory to a better and different future than where the world was in the 80s, in the 90s, in the 2000s. So I think that has implications in all sorts of different ways for people, for companies, for investors. But I hope that people recognize that we are exiting the first moment, the incubator, the cradle, and we are entering the moment where this thing actually delivers on what so many people thought was possible. and appreciate that, and try to steward it through that in the most productive way to impact the world for the future.
My biggest takeaway from our conversation is that we are so early and we just need to be a little bit more patient for Bitcoin, the institutional era and the mainstream adoption era. Hunter, thank you so much. Hunter Horsley, CEO of Bitwise. Great to talk to you.
Total pleasure. Thank you.
Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. Last month's top episode was with Peter Schiff at Jay's boosted 10,000 sats and said, "We're sailing from Panama to Tahiti, and thanks to the digital world, I'm able to listen to your podcast and reply and boost it." It's amazing Peter talks about digital photos, but doesn't get digital money. Oh, I agree with you at Jay's. I love reading and replying to your boosts, so download Fountain on iOS or Android today and make sure you're subscribed to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open if you want to share feedback or guest suggestions. Just reach out at Natalie@talkingbitcoin.com. I'll see you next time.